Thanks for tuning in to Bloomberg Quint. A very special guest all the way from Singapore, one of the largest asset managers in emerging markets and in India, Hugh Young of Aberdeen joins me right now on the show. Good having you, Hugh. Thank you so much for taking the time out. Now, you've had multiple decades of experience of investing in emerging markets and in India as well. You've seen multiple cycles as well. Do the current world worries bother you? What's happening between Iran and Israel, or the trade tensions that exist between multiple countries, oil the way it is trading out as well? Do any of these worry you?
Well, of course, they all worry us, and there are always lots of reasons to worry. I think the difficult thing when you're looking at emerging markets or any investments is whether you allow other factors outside the pure area of investment to deter you investing in what you think are the right things. So crises in the Middle East, North Korea, oil prices, interest rates, should they put you off investing in a great company you discover in India, trading at a reasonable valuation that over the next 5 to 10 years should perform very well? I think for us, it's a matter of keeping focus and deciding really on the nitty-gritty of investment. So is that company the right company to be investing in for the long term, and use a lot of the external worries maybe as opportunities? I mean, it sounds rather brutal and callous to be looking at crises away from your direct investment as an opportunity to buy into an investment at a good price, but that's essentially what we're doing. So yes, we expect interest rates to go up steadily. We expect bond yields to rise. We actually think that's good long term. It might cause markets to be jittery short term, and of course we have all the geopolitical tensions that never seem to get any easier. So there are always causes for worry, but fundamentally we're putting our investors' money into hopefully very strong long-term growth stories, and we shouldn't allow extraneous factors to deter us from that.
Well, ever so modest, you. What about oil prices? Let's talk about the two pieces that you spoke about, and we'll talk about rates as well. But oil is probably a bit difficult to figure out because we don't know whether it will last at these levels or no. What's the base case that you are factoring in for crude, and how does it impact your investment decisions into EMs currently?
Well, again, I suspect our base cases are probably as awry as everyone else's have been. So when oil was falling down into the 20s, everyone was predicting the death of oil, and of course now it's risen substantially from those levels, much to everyone's consternation. I think for us, again, rather than having a base case for oil prices, which notoriously everyone has been poor at, is more understanding the consequences of oil prices, whichever way they go, and whether they can be fatal for the companies in which we invest, or indeed some of the countries. So understanding the countries that are importers of oil, and how will that affect them, how dangerous is that for their balance of payments, and similarly for the types of businesses companies are in, whether they're an oil explorer or a rig maker, and we have plenty of those here in Singapore, and at what levels does that really put a business under stress at either high levels of oil or low levels of oil, depending whether you're a rig maker or an airline. And then, importantly, within the portfolio, having a balance of the best, and really that probably underlines much of our investment style is looking for people who can withstand the shocks. So balance sheets are absolutely vital to our investment style, rather than setting a line in the sand saying we think oil price is going to be this or interest rates that. it's more a matter of understanding that what we're investing in can survive the inevitable shocks, and we never know where they're going to come from. At the moment, it might be oil. Tomorrow, it might be interest rates. Another day, it might be something else.
Well, okay, that's interesting. But okay, if I can just dwell on this a bit further. You mentioned about countries and the balance of payment impact due to high crude prices. The way crude is trading right now, does it soften the attractiveness of India? Other things notwithstanding, I know valuations are a concern, but if valuations weren't a concern for India, if oil prices staying the way they are, would that slow down your otherwise bullish stance on India, if it was bullish in the first place?
Yes. I think all things being equal, higher oil prices are a negative. Yet you could also argue at some stages they prompt innovative solutions if they remain far too high for far too long. And again, of course, over time one must move away from fossil fuels. But yes, I think you're absolutely right. Shorter term, higher oil prices, all things being equal, are not good news for India.
What about the currency? It does impact the investment decisions of foreign institutional investors. The rupee, by virtue of the move yesterday, now becomes the worst performer in Asia in 2018.
Yes, having had a fairly decent run previously, I mean, it's gone back to, I mustn't say some of its old ways, but it certainly has weakened, as we've seen, and the US dollar has strengthened. So we've seen a general pullback broadly in emerging market currencies as a result. I think for us, of course, that while that's off-putting short term, I think again it gives opportunities. So the rupee at this level, I think for us, we'd be buying more rupee, not necessarily in the expectation it's going to strengthen immediately against the US dollar, particularly where when US interest rates are on the rise. But again, longer term, the yields that we can obtain in India should hopefully mitigate the weakness in the currency.
Wow. So would you be putting fresh gunpowder to work in India currently, or are you waiting for something to happen, either a valuation correction to happen or the print in earnings to be more visible before you take a decision?
I think on the equity front, we're probably slightly sitting on our hands because as we felt for quite a few years, the valuations in India are such that really we do need the earnings to start coming through. And up until recently, those earnings have been, to be honest, a bit lackluster. So you haven't seen the valuations justified by the earnings increase, and often it's a matter of, well, maybe it's next quarter or next half that we're waiting for. So it's hopes deferred in some senses, and we have had lots of external shocks, again the demonetization, GST, and so on. So again, we're ever hopeful that will come through, but at the moment, generally with our broad overall exposure, we're sitting on our hands in the equity market, but still happy to put money into the bond market on our fixed income side.
Interesting. There's a sharp polarization in stocks in India. There's this whole consumption pack, the newly listed insurance pack, some of the retail-facing banks. You might be owning some of these as well, the HDFCs and the Kotaks and the likes, which are trading at extremely premium valuations, versus a clutch of other names which are just not finding any takers. What makes you either more comfortable or uncomfortable? And are you fine with the kind of valuations that, for example, life insurance companies like HDFC Life are commanding right now, or some of the banks are commanding right now, or some of the consumer staples are commanding right now?
Well, this is an issue for us because these are the great companies that we've held for a long time. And new great companies coming to market that are immediately gone to similar valuations as HDFC, HDFC Bank, the Unilevers of this world. And it's quite off-putting because essentially we want to buy great companies as cheaply as possible, and we have seen very much a two-tier market where, for example, the state banks are selling at a dramatic discount to the private banks. But of course, when we see certain things happening in markets, you understand why they're selling at a discount. So we're not very comfortable switching from very high quality, highly priced stocks into lower quality, lower priced stocks. And that's really reflected in our overall view of the market, which is why we're slightly sitting on our hands rather than piling into stocks on 40 times earnings or 4 times book in the financial sector. I mean, it's a shame as far as we're concerned that there is this polarization in the market, but it's not uncommon in many other markets at the moment. Anything perceived to be high growth and quality. In other markets, it's more the internet stocks. In India, it's the consumers, the financials.
But I know you don't take knee-jerk decisions, Hugh. But would you be you seem to be comfortable, even if you're not buying into them, by staying invested in some of these expensive names, which probably suggests to me that you believe that the earnings growth in at least these high-quality names will continue for a few quarters and a few years longer, and therefore they'll make your investments worthwhile.
Absolutely. We're not looking for a few quarters because any given quarter can be disappointing, as we know. We're looking ahead 5, 10 years in many cases, and our holding periods for some of them, such as the HDFCs, have been over 20 years that we've held these companies, the Godreges of this world, the Asian Paints. So we do have long-term horizons. We just wish short-term they were a lot cheaper and we'd be even more comfortable holding them.
Interesting. I heard you mention in this network interaction that India has some of the best quality companies. It's exemplified by some of your investments here. One space where you've long held conviction, it came about or was coming apart at the seams last couple of years ago, was IT. Now seems to have found its mojo back, but we are in a completely different world as far as technology goes. Do you think Indian IT has it within itself to come back? And the part 2 of my question is, while the mid-cap names are kind of showing that promise, that's probably not the pocket that you've looked at very actively. You've looked at the larger names. And therefore my question, do you believe large cap IT has the runway of growth for the next 5-6 years or longer?
I think the growth trajectory has changed quite substantially for the Indian IT companies. So in the early stages, and this is going back a few decades, of course, it was exceptionally strong growth that we saw, and then a maturing of the industry. So I think we're in the mature phase where it's become a lot more competitive, a lot more difficult, and it's not obviously long gone when it's just a matter of selling cheap offshore labour, which I mean, it's never quite as simple as that, but it's certainly developed far beyond that. So I think that is definitely reflected in the Indian IT ratings. So the ratings have come down, and we're expecting far more modest growth there. And on your other point of looking deeper in the markets, we do look at deep in the markets. For example, we participated in the Lemon Tree offering, so we do have exposure to the mid-cap and even some of the small-cap area. I think the issue there has also been valuations have been an issue in some of these areas as well. So the valuation issue is not confined to the large caps, it's right across the market in similar types of stock.
No, I'm sure you've arguably got a mid-cap and small-cap fund as well. Just last 2 questions, what's in the last 12 months or 18 months, what's been the best theme or space within India that's made you rub your hands in glee and say that I want to own that business for the next 10 years? Has something like that come up recently in India?
I think talking about brand new companies, Probably, well, I'm not sure we ever rub our hands with glee. Maybe only with hindsight do we rub our hands with glee, because often the things that sound terribly exciting on the day might fade and die, whereas some of the old stalwarts, you'd have never really rubbed your hands with glee about something maybe as, I mustn't say as dull as a Unilever or a Godrej 20 years ago. Soaps and things like that. Is that terribly exciting? Yes, well run, etc., etc. Or a paint company. So I think we're a bit cautious about rubbing our hands with glee, and we always look at things with a great deal of scepticism, and are looking out for what can go wrong and trying to avoid the potholes. And certainly you can step into those potholes if you're rubbing your hands with glee and looking up in the clouds. There are always new companies coming onto our radar screen. So again, companies like Lemon Tree could be very interesting, but nothing is guaranteed. So we just wait and see, and then we'll tell you in 10 years' time whether we're rubbing our hands with glee over decisions that we make today.
Okay, fine. Fair point. I take on board that argument. My last question is about the political premium that India attracts vis-a-vis some of the other countries. You have probably looked at what's happened in the state of Karnataka. We don't know which party will form the government, but the Bharatiya Janata Party did emerge as the single largest winner in that state. Does all of this augur well for the general elections in 2019? And would investors such as you factor in political stability in India for the next 5-6 years when you're making your investment decisions right now? And is that a big plus?
Well, certainly if India is politically stable for the next 5 to 6 years, yes, that is a big plus. And one of our long-term frustrations with India has been politics and policies, and it is good to see some good policies coming through. So GST, for example, and various other policies that Modi is putting through, I think are good. Although I would say that in many ways corporate India long-term has done well, notwithstanding the politics, not because of politics, but it's done well despite the fact that politics has been not great. So any improvement in the political front, and really that means we're looking at policies that are clear, transparent, and where we understand the rules. I mean, I think that's absolutely important to us. And the Karnataka election is quite interesting. It still shows really the power that Modi still has. I mean, he's had to work pretty hard for it on the ground, but there still is great support for him as an individual. It's extending that support and having the policies behind it and the team behind it that's the most important thing for us.
Okay, Hugh Young, really appreciate your time. Thanks so much for speaking with us here at Bloomberg Quint, India.